Consumers pulling back on purchases of home appliances. Whirlpool saw weaker demand for its products this quarter, despite signs of inflationary pressures easing. The company posted mixed results for the second quarter, beating adjusted earnings per share expectations. Sales, though, falling 6% from the prior year to $4.7 billion, just shy of analyst estimates. Joining us now is James Peters, Executive Vice President and Chief Financial Officer at Whirlpool. Jim, it's great to see you. We love checking in with you to talk about what's going on in the world of appliances. I just want to start big picture with what you guys are seeing in terms of demand. Talk me through it.
Yeah, and good morning. Good to be with you guys again today. What we're seeing in terms of demand, you could probably break down into three different buckets here. And if you think about our business, there's a big part of it that's replacement, and that's 50 to 55% of the appliances we sell. And that segment is relatively stable and strong and pretty predictable. The next part is what we'll call discretionary spend, and that's about 30% of our business or 30% of the industry. That's the segment right now that I would say the consumer is still relatively tentative in. And part of that is driven by existing home sales are still relatively low. And if you think about it, when people buy an existing home, one of the few things they do change out when they move in might be the appliances. So that segment right now, we would say, is below where we expected, but is relatively stable. Now, the last part of the industry in our business, which is about 15% for us, is new home construction. And we're beginning to see that pick up. And I think you've seen in the last couple of weeks, a couple of the large builders come out and be rather positive. And we're seeing the same thing. We're beginning to see their business pick up, which means in about 6 months, our business picks up as those homes are completed. So, as I said, it's probably a mixed bag on demand within the U.S. And then if you go outside the U.S., part of what impacted us within the quarter is that demand in EMEA was down by about 10%. And that's just the macroeconomic environment there and lower consumer sentiment. But as I said, in the U.S., we are positive on the demand in the future, and we do believe we'll begin to see some of that pick up. And with people who can't find existing homes, many of them will turn to remodels at some point, which then falls in that discretionary bucket for us.
Jim, it's Brian here. Good to see you as always. How fast will that rebound in the U.S. housing market take place? This week, we're supposed to get what could be the last interest rate hike for this cycle from the Federal Reserve. What does that mean to the next 6 to 12 months in the housing sector?
Yeah, no, that's a good question. Like I said, we're already seeing the signs of new home construction pick up as, people who are in the market for a home and couldn't find an existing home due to low inventory. And the reason there's low inventory, as many of us know, it's with mortgage rates where they are. Nobody wants to give up on their, 2.5%, 3% mortgage to take on a 7% mortgage right now. So we expect to see that pick up in new home construction, over the next 6 to 12 months. I think then as you look to next year, we would expect to begin to see, as interest rates stabilize and it's kind of been absorbed and normalized within the marketplace, you'll begin to see some of those existing home sales pick up. But, right now, I'd say new home construction will be the first thing to show signs of growth.
And Jim, for the people who are buying new appliances, what kind of choices are they making? Because I know you guys have, you've been doing more sales, more promotions, but at the same time, you've been leaning into some of your higher end stuff. I know you guys bought InSinkErator. I am an InSinkErator owner myself with a kitchen reno that I did. So how many people are making those higher end decisions right now of your customers?
Yeah, I would say, the mix, and first off, thank you for buying InSinkErator, but the mix of our customers we see right now is relatively stable and pretty much in line with what we saw, historically and especially pre-COVID. Now, as I mentioned, as new home construction picks up, what you do start to get is a disproportionate amount of kitchen appliances because every new home takes on average around 5 appliances, the majority of those being kitchen appliances. So, that's the categories that we expect to see pick up. I'd say right now, though, our balance of sale or our mix of product is relatively similar to what had been in the past, as well as our mix of brands. We still are seeing the consumers buying in the premium space and also in the mass space. So despite the fact that the promotional environment has returned to levels that we would have seen before COVID, I'd say, consumers are still buying at that premium and especially that mass premium segment right now.
And Jim, I put this question to General Motors CFO this morning, and I'll put it to you. Do you think inflation has peaked for this cycle? Are you confident that you can say that?
I would say, listen, from a material cost perspective, we saw the peak probably late last year. And if we look at other costs, our logistics costs have come down. I'd say labor is the one cost that, what I would say is that inflation is probably steadied there, and it's at a more typical rate. Obviously, I don't think labor costs will come back down, but we have seen, we talked about our material costs for the year. We saw about a $300 to $400 million deflation in our total material costs. And in our logistics costs and other things like that, we saw similar levels of deflation. So I do believe, at least for our business, when you take it in aggregate, inflation has peaked. But if you break it down among the components, there's still a few areas where we are seeing some inflation.
One of the things that always has amazed me, Jim, and I used to cover Whirlpool as an analyst more than a decade ago, is the management team's ability to always find cost savings somewhere in large quantities. So this year, how much will you find in terms of cost savings, and then what's left for next year?
Well, right now we're targeting, and we expect to deliver about $800 to $900 million of cost savings. Now, as I said, the first $300 to $400 of that is just raw material deflation. Then when you look at our products, within our products, as we launch new products all the time, we have the opportunity to just look at how do we take material cost out of the product, use different components, develop it in a different way, different engineering specs, whatever they are. Then additionally, this year we've talked about is that we've been able to reduce our headcount, our overall headcount, by about 7%. We didn't do any big layoffs or reduction of force. We just managed our attrition very well, which allowed us to bring those costs down. So, and then I talked about logistics costs coming down, and we continue to optimize our logistics network to try and, bring those costs down even further. As we look forward to next year, I think we see next year as a environment that we can continue to reduce our costs within. And typically, we've talked about on our earnings calls that in just any given year, taking costs and inflation to be relatively stable, we still would target about 0.5 point to a point of cost reduction within our margin walk. And, that's at least what we see as we head into a new year. Right now, it's a little bit early to predict, what the market might be from materials and logistics costs and other things. But I do expect next year to be another year of cost reduction for us.
Jim, I want to turn to the innovation front before we let you go, because just a small thing. We were showing some video, washing machine where you can take the agitator out to fit different stuff in there, which is a small thing, but exciting from a laundry perspective.
Oh, that's cool. No, that's cool.
Sure. I'm just curious what you're most excited about on the innovation front, what you're seeing, what new products you're coming out with that you think consumers are going to be excited about as well.
Yeah. Well, and I'd say, this year we did launch our Maytag pet line, laundry line, which really what it does is adds a filter in that you can just rinse out when you're done, but it collects pet hair. And I think that's one of the things we've seen consumers most excited about, because if you think about during the pandemic, a lot of people went out and added a new fuzzy family member or two to their household. And, now they're going through the issues of having dog hair or pet hair everywhere. So, that's one of the things that we've been very excited about this year. We continue to be excited with the dishwasher that we launched, in the last couple of years that has the usable third rack, or the third rack that has fully functioning wash system on it. So those are just some of the examples of some of the products that we are excited about right now. But, within any given year, we typically launch over 100 new products between both our major domestic appliance line as well as our KitchenAid countertop line. So, I would say that just on a regular basis, if you think about that, it's about 25 products every quarter. There's a lot to be excited about.
Jim, are you trying to say here that, one should not take their furry puppy coats and putting them in the washing machine? Julie, what do you do with Sparky's clothing? What do you do with it?
Sparky doesn't wear a lot of
clothing.
But he's a shedder. So, if I could throw his doggy bed in the washer and have the pet hair filter, that would be helpful for
every day. Every day is eye-opening. Let's leave it there. James Peters, Executive Vice President and CFO, Whirlpool Corporation. Always great to get some time with you. Appreciate it.
Great. Thanks a lot, guys. Have a good day.
You as well.